This market pullback is not ruining my portfolio. Yes, I have to wait for many of my positions to recover and be thriving again. But even through the volatility, I'm still receiving my dividends, whether the market is red, green, or trading sideways. In Q1 of 2026, I received $315, up about 14% from Q1 of last year, just from being calm, consistent, being the buy and hold investor that I am. So today we're going to be taking a look at the investments that paid me in my taxable accounts in Q1, including Apple, who recently turned 50 years old and has a couple of catalysts that can impact the next decade for the company. All right, so let's get started with two of my ETFs. VOO paid me $37.55. This ETF gives me exposure to the S&P 500. It is definitely a growth position like many others in my portfolio, but in addition to that steady growth, I also receive a quarterly dividend. And this last dividend payment was about $1.87 per share. Next, VTI, the Vanguard Total Stock Market ETF, another consistent long-term investment, always compounding and bringing growth to my portfolio. I hold this in two different portfolios. One built $10 a day in my portfolio over at Public, and some more shares in my portfolio over at Webull. So this one is about 99 cents per share, and my dividend payments were $35.46 and $23.36. So this investment is not just those large cap companies. It gives exposure to small cap, helping to bring a little bit more stability during these choppy weeks like we've been having since the beginning of 2026. Now on to some of those investments that were truly added to my portfolio as dividend-focused investments. SCHD paid me $14.74. And SCHD is the Schwab US Dividend Equity ETF. Year to date, it's up 11.7%. It's something different than a VOO, which is going to give you exposure to those mega cap companies like NVIDIA, Apple, Google, Microsoft. There's only a 7% overlap between VOO and SCHD. It has 104 holdings, and it's more heavily weighted into staples, healthcare, and energy, with top holdings in Chevron, Verizon, Coca-Cola, Pepsi, Procter & Gamble, to name a few. Now on to Realty Income, ticker symbol O, and it is known as the monthly dividend-paying company. It paid me $85.05, $3.25 per share annually. This company has increased their dividend for more than 100 consecutive quarters. And even with rate pressure, they're expanding into industrial and retail properties. Next up, I have SPHD, which is Invesco's S&P 500 high dividend, low volatility ETF. It paid me $24.91. Just like the others, it's doing exactly what it's supposed to do, providing steady income. Next, another monthly paying dividend company, Main Street Capital, which is a business development company. This is one of my favorite dividend payers. It has a long history of dividend stability. It pays an occasional, usually quarterly supplemental dividend, and it invests into lower middle market companies that banks often overlook. It's an investment that is definitely built to bring income to your portfolio. Now on to a few of those growth stocks that just happen to pay a small dividend, starting with Microsoft. It paid me $4.82, but I'm building up and holding right now, even though the stock price has been having a tough time, down nearly 23% year to date. But I'm focused on the long term when it comes to this investment. They're making massive investments into its AI infrastructure, Azure, and other things that can bring potential growth down the road. Google paid me $5.41, and they're newer to even paying a dividend. And it's a very small one, about 21 cents per quarter, or 84 cents annually per share. But it's part of my growth portfolio and another company focused on AI and cloud growth to enhance the company's future outlook. Meta paid me just $1.84. It's a much smaller position in my portfolio and also newer to paying a dividend, as well as being a company right now focused on balancing their AI investments along with staying profitable. So I only have 3 shares in my portfolio and would love to have more exposure to this company. So next up, let's talk about Apple. As I mentioned earlier, they just turned 50 years old and the company is still striving for innovation, just like they did when they were a startup. They're focusing on their MacBook Neo as well as AI glasses. So that will be a new brand product category that could redefine the wearables market like the Apple Watch when it comes to Apple's ecosystem. It's still one of the strongest in the world. They have 2.5 billion active devices worldwide. So it's a position I'm holding, not building on right now. Now on to a couple of consumer and value names. Disney and Target. Disney paid me $3.75. They are a profitable streaming company now, right up there along with Netflix and YouTube. And their parks are also bringing in cash. But this is the one that I have cut several shares from my portfolio and is not in line with my long-term goals. But the few shares that I am still holding paid me out this dividend. Target paid me $11.94. In one of my previous updates, I was down 31% when it comes to Target, and I'm still in the red, down about 17%. So a little bit of improvement, and they are striving to increase their margins, their digital sales. So I'm holding until I'm in a better position to move on from having this one in my portfolio. And receiving that dividend helps a bit, but it is a smaller position at only about 10 shares. When it comes to the positions that I shared, I'm working on building up Microsoft and Meta. The drip is turned off for Realty Income and SPHD. My largest dividend comes from Realty Income at $85.05, followed by VTI and Main Street Capital, as well as VOO. I'm going to be holding everything that you see here, but I have made that step on those couple of holdings that I have over in the MooMoo Investing app. I've gone in and turned off the DRIP, the dividend reinvestment plan. So I'm going to keep building my portfolio through volatility. We're facing rising oil prices, tensions in the Middle East, and throughout it all, I have my cash ready to take advantage of the opportunities when it comes to building up my portfolio. So that's it. A quick look at my Q1 2026 dividends. What I'm holding that pay me dividends when it comes to my taxable accounts. I'll be coming to you soon with an update on some of my positions in my retirement account over at Fidelity, including SPHD, FXAIX, and FSPGX. So be on the lookout for that. And comment below, what are some of your favorite dividend-focused investments? Are you more focused on dividends or growth when it comes to building your portfolio? Make sure to leave me some comments, subscribe, like, hit that notification bell, hype my videos. And if you're on the run, at least drop me some yellow hearts in the comments. Thanks for watching. Okay, bye.